On the loser's end, um, I mean, Austin, what is there to say about Marvell? What is there to say?
Uh, it's we had talked about this, I believe, in our August 1st episode, and you had mentioned this was one of the more disappointing positions in the portfolio. It continues to disappoint. It's mentioned in the same breath as Intel. Now Intel got a little bit. I don't know if it's a parachute or golden handcuffs or whatever it is from the government, but there's a bit of a handshake there that maybe helping that other disappointing name in the chip space here. But Marvell has been high on promise, low on expectation. I'm sorry, low on delivery. So, I mean, let's talk about what we are seeing and why this is the most disappointing company. And you've talked about this as maybe the last quarter where they get a deferral here, and that the next quarter might be the one where we sort of got to call it one way or the other. But talk to me a little bit about that and what the specific earnings showed, because we did see earnings per share growth that on the surface are impressive, but it's sold off massive. I mean, the company was down almost 20% after earnings.
And there's always going to be companies that have every narrative right, but don't deliver in a way you'd expect. Qualcomm during the smartphone boom was the poster child of this. You mentioned Intel being at law of markets, where you expected more success, but never really putting it together. I am beginning to wonder if Marvell might be in that position. They're in the sweet spot. They've got great inroads into the booming areas of connectivity, AI processors, but the results are, they're frankly just trailing a lot of their competitors. If you want to say glass half full, when we look at the actual results last quarter, it was EPS growth of 128%, revenue growth of 58%. If you look at the Wall Street adjusted earnings for this year, that puts them at about 22 times what Wall Street's expecting. But the glass half empty is number one, the fact that this was a quarter below Wall Street expectations. Well, I just talked about all the other companies blowing out earnings. So that's a troubling sign. And number two, that Wall Street continues to discount the company because they have big promises into the future. They have low execution. This quarter was another example of what appears to be low execution. They've lost a lot of content with Amazon, who's a major company, which has led to disappointment this quarter. And their guidance disappointing, which they attribute to lumpiness in their business. Like you said, Austin, where I'm putting them right now is I'm putting them in a hold. We will definitively not be adding to the stock even after that reaction. But what I want to see is they're claiming lumpiness for this quarter, a reacceleration at the end of the year, the final quarter. If they don't deliver there, we'll probably consider selling this position. I don't want to overreact because, again, it is a longer term story. But I do need to be aware that we've seen some signs of customers pulling back on their relationships with them. We've seen them unable to meet some of their earliest projects, which doesn't speak as well to the long-term opportunity. So, Austin, on this one, it's just, like I said, do not add to this position right now, but we are also not quite ready to sell it because the opportunity is there. It's just, again, this is one we're going to need to be watching earnings next season like a hawk because it'll probably determine our long-term outcome with Marvell.